Matt Faircloth here from the DeRosa Group, and I'm going to tell you guys a really scary Halloween multifamily story with a lot of lessons woven in between. Believe it or not, this is an absolutely true story, a lot of which is outlined in my book, Raising Private Capital. So if you haven't read this yet, go grab a copy of this from Bigger Pockets, and you'll hear the rest of the story and a lot of what I learned from it, and also how to raise millions of dollars out of your own network in this book, Raising Private Capital. Maybe you guys are interested in doing a multifamily deal, and you're here because you want to do multifamily real estate investing, but you want to learn what not to do, and there's plenty of that in this story. So if you're a multifamily investor and you want to scale up your multifamily business, why don't you go and grab a free copy? That's right, it's free. Go grab a copy of our course on how to buy your first multifamily deal. And it could be your third, fifth, 10th multifamily deal, but there's a lot of what we use, the methodology, the mindset, the psychology in buying multifamily, which we've done a lot of. Go grab a copy of our course on how to buy multifamily real estate, DeRosaGroup.com/learn, or click the link in the description below. So the story starts at an 18-unit apartment building that my company owned many years ago in Northeast Philadelphia. It was a company that we managed ourselves. It was a great property. We'd done very well with it. And we decided it was time to sell. We paid $1 million for it for 18 units. Good cash flow. Investors are happy. Investors were making around 9% on their money annualized. So they're happy. Everybody's good. But a buyer just kept banging his head on the door to buy the property from us. And I got him up to 1.6. So it was a $600,000 gain for us and our investors. Too good to turn away. Would have produced like a 25% cash on cash return to our investors if we had sold it at that number. So we decided, you know what, we'll sell. And our investors said, you know what, we've only been in this deal for a couple of years. We want to keep going. We want to let this money roll up into something else. That is called a 1031 exchange. And a 1031 exchange works like this. If you own investment grade real estate, not your primary residence, but investment real estate, you can sell it and then take the profit from that and roll it into a larger investment piece of real estate and let all that money roll up where you're not paying any tax on the gain that you made on the first property. We decided to do a 1031 to buy a piece of a much larger property, a 198 unit that we were buying in Fayetteville, North Carolina. And it was going to buy a little small portion. We were going to raise the rest of the money from investors. So we find this 1031 exchange intermediary who needs to hold the money for you in between closings. While you sell property one and then buy property two, there's this third party person that sits and holds your cash for you. And then when it's ready, they put it into your next deal. Found a 1031 exchange custodian online. They had good reviews from a website we all have heard of. These guys here, there's a lot of good reviews about that custodian on that website. All good. We go raise the rest of the capital. Closing happens. $716,000 from the sale, including our principal and all those things all get rolled over to that custodian, and they sit on the money waiting on the closing of the 198 unit. We raise all the rest of the capital. Everything's good. And I start calling this company saying, hey guys, we're ready for closings 2 weeks out. We need our cash to get freed up. And I couldn't get a hold of him. All of a sudden, all his staff, they were all there when we were closing the sale of our property in Philly. All of a sudden, nobody's answering their phones. Nobody's replying to any emails. I even had my lawyer send them a nastygram, all the things, and nothing happens. And so I was like, you know what? I'm going all the way to the top. I'm going to Google the owner of the company. I'm going to find the owner of this company, and I'm going to reach out to him and say, hey, man, your team's not getting a hold of me, and I need my money for my closing. So I Google this guy's name to try and find him on LinkedIn, right? So top thing, local real estate investor found burned alive, roaming around neighborhood, now in coma. Right. So it turns out this guy was sitting in his convertible and had gasoline poured all over him and was lit on fire in a residential neighborhood and is now at third-degree burns all over himself and is now in a coma to save the man's life. And initially you're like, oh my goodness, that's so terrible. Now I get why his employees haven't get back to me because their boss is in the hospital and all these things. And maybe he's the key decision maker. They need his signature. You get empathetic, right? Then I immediately thought like, things like that don't happen to normal people like you and me, right? We don't get lit on fire in a car or whatnot. Like that, something bad must have been going on there. So I started to do a little bit more digging, and I went back to that website that I just mentioned. And all of a sudden, there's a lot of other people on that website talking about, that company, Robble, they owe me money too for my closing. So before you know it, I recognized one of the names on the list because it's a small world in real estate investing. And I reached out to one of the folks and said, hey man, are you waiting on money from that company too? And he says, oh yeah, unfortunately that guy was running a Ponzi scheme. And you're like, are you serious? There's a Ponzi scheme going on. The 1031 exchange company is supposed to take your money and is supposed to sit on it and wait for your closing. When they weren't doing that, they were doing all kinds of other things with their money, spending it, whatever it may be. And then it became exposed, the Ponzi scheme that he was running, because he wasn't around to keep the trains running and keep more money coming in to throw good money after bad, and so to speak. All of this is bad stuff. And we have a closing in 2 weeks. The horror begins, right? First lesson, if something happens that involves investor equity, the first thing you do is you call the investors. You talk to them about it. You send out email communications, you get transparent. Last thing you do is go dark and hide out. So I called all the investors and I told them what had happened. And I said, hey, we got robbed. This is what happened. This is what I'm going to do. We're still going to raise the additional equity. We're going to lawyer up. We're going to go after this guy, which we did. And I'm going to defend you. And I'll do my best to get your money back. I don't know exactly when that's going to happen. I don't know exactly what it's going to look like. But I'm going to defend you and be the custodian of your capital, which we did. Then I had to go and scramble to raise the additional money to still close the deal. So we raised some additional capital. I was even able to negotiate a small bridge loan from somebody to bridge the rest of that closing, meaning like a short-term loan. They lent us money for about 2 months, and that enabled us to close. And so eventually I raised all the money that I needed to close the deal and to get that bridge loan out of there, and everything was done. So then we own this 198 unit. Everything's happy, right? No. Then we still have to go after the 1031 guy. So me and this one person I met on that website I mentioned go and find all the other folks that had done business with this guy. And before you know it, there's obviously lawyers showing up that are trying to help and everything like that. And lawyers also helped us aggregate the list of all the people that have been involved with this 1031 exchange custodian. And we got us all together. We decided to do a class action suit. And so we did a class action suit on this person. It takes a while, but the lawyer that we had hired had agreed to take a percentage of whatever they got back. Our contribution was $700,000. That was how much money we had with this guy. Total of $6.5 million that he owed people through 1031s. He blew some of the money. Some of it went to stupid things. Some of it went to buy himself $1 million house on the beach. And a lot of it went, believe it or not, guys, into assets. He bought himself 70 single family homes that were gut rehabs, kind of things that needed to get fixed up. He bought himself a couple of self-storage centers. He bought a mobile home park. And so through discovery, we came into all these properties. We just like, okay, this is what he owns. Now we're going to push and try and get equity, try and force sales on these things, foreclose on them and that. Also, we got his insurance company to step in. And so over time, chunks of money start coming back. And so I was able to give that over to my investors as the money came in. But what I did, and this is another lesson for you guys, I also covered my investors as if their $700,000 was part of the deal. It wasn't. It did not go in that project, but I gave them equity as if it did. Where did I get that equity from? Yours truly, from me. The equity should have bought around 18% ownership in the property. I had 30%, so I gave those investors the lion's share of my ownership of that property, just to make sure that they were covered. Because I ended up having to raise additional investors to come in. So I had to cover the investors who were caught up in 1031 somehow. So I put my equity, my general partnership equity up there as collateral, and I covered them with that. Just the right thing to do. The lesson therein, guys, is put your investors first, especially when bad things happen. Make sure that they are covered before you are in whatever your upside is and whatnot on the deal. I still treated them as if they were in accruing profits and things like that, as if they were in the deal anyway. Even after they had gotten a lot of their money back, I still paid them a large profit on the property when it did sell years later. End of story, right? No. Now you got a 198 unit in North Carolina. Let's go there because there's more horror. More horror in the North Carolina property that I want to give you guys more lessons and stories on. We hire ourselves a property management company that was referred to us by a friend that owned several other properties in a market that was a couple of states over. The property management company that we hired said, we want to open up shop in North Carolina. we want to be in North Carolina and have a strong presence there. They hired themselves a regional manager right after we close, buy the property. That regional manager quits, right? And then her job was to expand the company's presence in North Carolina, those kind of things. And now we are the only asset in the state of North Carolina that this company manages. When you hire a property management company, make sure they have a strong presence. Make sure the number one or number two industry leader in the market that you're buying into. They would have done a great job had they had lots of other industry presence. But now, because they didn't have any presence in that market, aside from our one property, they had a regional manager. The regional manager they assigned to this property lived 4 hours away. So she was out to site maybe once a month, maybe every other month, and tried to manage this property on the phone by doing conference calls and that kind of thing. It was not a good equation, right? But it was what we had at the time of closing. It's very hard to change the property management company in a multifamily once you're in. So then what you got is you've got a brand new site team, which consists of a site manager, a leasing agent, and 2 maintenance technicians that were there working strictly for the property. For larger multifamily, you tend to have full-time staff whose sole job in the world is to run your apartment building for you. So that's what we had. But the problem is they had no leadership above, aside from somebody on the phone, not somebody in person showing up. And as they say, when the cat's away, the mice shall play. And so this site team was not run well, and they did not do things as clearly, or lines of communication were crossed. A few stories. All the units needed to get renovated. All the units were like circa 1917, 1980. And the owner we bought it from, who, by the way, we bought it from him at the same price that he paid for it 7 years earlier. So no appreciation, plenty of opportunity there, right? So his rents were like $500 for a 1-bedroom, $600 for a 2. The market was almost double that. And the reason for that is because the units really needed to get some TLC, some investment, some conditions. There was a lot of potential to upgrade these units with a small investment. Would probably invest like $5,000-$6,000 a unit, and you'd be able to get $300 per month more in rent to get the property up to market rent. $300 times 12 annualized is almost all your money back for the investment that you made to upgrade that unit. Back then, it was a really good investment. The property manager misconstrued that message, and they went to the site team and conveyed the site team what our vision was and all those things. And somehow or another, it ended up where the site manager thought that we were telling all the residents, hey, listen, no matter what, your rent's going to go up. And we're going to renovate apartments, and whether you like it or not, rents are going to go from $500 to $800 with very little for you to do about it. They really should have said, hey, new owners coming in, they're going to build lots of playgrounds, which we did. We built 2 playgrounds on site, refaced the entire property. And for tenants that didn't want to move, they were allowed to stay in their apartment. They didn't have to move to a renovated unit. They could stay in an old unit and rents would stay the same. But if they wanted to move, rents would be more. Because of the lack of site manager, because the lack of oversight and everything like that, the message did not get conveyed properly. And so 75% occupancy drops down to 40% occupancy. It happened very quickly because a lot of the tenants just said, you know what, I'm not sticking around for this show. I don't want to be around for my rents going up without me having any control over it. Misconstrued message, boom, occupancy goes to 40% because of the site manager's misconstrued of this message. Horror story, right? Now all of a sudden the site can't pay its bills. Now all of a sudden we're paying operations out of reserves, and our lender shows up and says, hey, guys, this isn't working for us. So we need you guys to refinance us out. And so we said, okay, we get it. We will find another lender. So I went and found a broker that was able to refinance us out of the loan that we had into a new loan with new construction dollars, new bite at the apple. And I said, okay, enough's enough. I'm going to fire that property management company. Just to cover a few lessons. To always hire a property manager company that has local presence. Make sure that you are writing or reviewing communications that goes out to the resident base, especially for larger communications like, hey, this is going to be the changes in rents, and this is going to be the changes in a leasing policy, those kinds of things. Make sure you get to review this. And the third lesson, obviously, is always find a way to profit if you can, or find a way to pivot, find a way to change things up. And in this instance, we changed things up to a refinance, and we're able to refinance this property to a new lender. Now let's do a quick tangent to the maintenance technician, right? Great guy, good old Southern gentleman, called me sir all the time and everything like that. I had my personal cell phone number, would call me all the time to check in and tell me what he was doing and everything like that. But just all the while, the property was still continuing to diminish in occupancy, but he had me wrapped around his finger, calling me sir every time I came out and keeping the site clean and all. And the site team didn't seem to like him, but they acknowledged that I liked him and I thought he was doing a great job. And we even went to him and asked him to go find us the contractors to turn these apartments, to go and renovate these apartments and everything like that. He went and found some local vendors because he's a local guy, all the things. Then we end up hiring a new PM company, and they saw him and they said, oh, geez, we needed that guy to go. And I said, are you kidding me? That guy's great. No, he's my dude. He's got my cell phone number, the whole thing. He said, no, trust me, that guy cannot stay here. He's not qualified to work for our company. So we'll bring in somebody else. They were kind of being polite about it. Turns out, after the new PM company took over, contractors start showing up to renovate units, and they're like, hey, we're here to renovate 3 apartments. Who do we pay our commission to? And my site manager said, what do you mean, who do you pay your commission to? Oh, no, the last maintenance technician told us that we have to pay 5% of whatever we get paid for renovating units. We have to pay 5% in cash to the maintenance technicians. We were getting paid $5,000. He was getting $250 in cash. Then, as the new PM company decided to get in and help us get this property, it was now 40% occupied, back up to 90 where it should be. Turns out the maintenance tech was finding local folks and renting apartments to them himself, some of the vacant units, including some homeless guys and stuff like that, letting them live in apartments for a couple $100 a month, paid cash, of course, to him. He also had one of the residents, local homeless guy he had found, had that guy doing his work orders for him, go and clean out units and everything like that. When a tenant moves out, you got to do a clean out, right? Meaning take whatever stuff they left behind, go throw it in the dumpster, go throw it away, give it a good broom clean, paint it, get it ready for rent again, right? So this maintenance tech was advised, hey, unit number 347 just moved out, go and do a clean out and get it ready for rent. He, of course, subs that work out to his homeless guy friend to go do the work for him. And homeless guy misunderstands the unit number he gives him and goes and cleans out the wrong apartment. So that means somebody went to work that day, expecting to come home to their nice living space and comes home to an empty room. What? Because the guy had cleaned out the wrong apartment, took all their stuff, threw it away, put it in the dumpster. They didn't have a whole lot of stuff. And of course, they ended up hiring a lawyer. They claimed they had $1,000 worth of food in the fridge. So we ended up having to do a workout with that resident. And obviously things started to unravel with this maintenance tech that we had. Good reason we fired him. So we let that guy go. So that's yet another horror story. Lesson there, guys, is keep a good finger on folks that are working for you, making sure they're accomplishing what they accomplish, and always have checks and balances and everything like that. It can't give all responsibility to an employee. Make sure there's at least some oversight that you have in there too. Now, last horror story we have. I'm now sitting at a property with 40% occupancy. COVID hits, and our 40% occupancy property all of a sudden is sitting in the middle of COVID. And how are we going to get it leased up? I've got a fresh bucket of capital because of the refinance we just did. I've got a new PM company, and I've got a partner, my man Justin Fraser, and he said, guys, listen, I know COVID hit. We're just going to social distance, and you guys are going to keep renovating apartments. Every other apartment complex in town shuts down, stops taking new applications from residents. We are the only shop in town continuing to take residents' applications for new people looking to move. Justin was marketing on social media, on Instagram and that kind of thing. And we came up with a concept called a touchless showing. And everybody's doing this now. I'm not saying we invented it, but we were one of the first folks to use the concept of a tenant showing themselves the apartment. This was back in 2020 when, again, nobody wanted to be physically close to anybody, but people still needed a place to live. So what you would do is you would put a lockbox on the apartment. Tenant would call, you'd vet them over the phone, and then you'd give them the code to the lockbox. They would go show the apartment, to themselves. Okay, I like this. They would docu-sign the lease, and then you can do it through Venmo, whatever you want, for the security deposit. So you don't really need a physical person at the property doing a physical showing or even a physical leasing of the unit. It works in some neighborhoods. It worked very well at this property in North Carolina. And I'm glad to say, using Justin's strategies, this property went from 40% occupancy up to 90% occupancy over about a 4-month period. Crazy, right? And that only happened through aggressive pushing of contractors to turn units, aggressive pushing of marketing, paid marketing to get people in to come look at this property. So now we're still middle of COVID, but the property's now performing better. Lenders happy, we're happy, investors are happy because they're now starting to see real positive changes happening. And so we're like, guys, this has been a rough ride. So we decided it was time to sell. So we put the property up for sale, and I'm glad to say we got 3x. An investor that put in $1, they got 3 times that dollar in return of principal plus profit on the sale of that asset, including the folks that got caught up in the 1031 exchange. I'm glad to say that, like I said, 80% of their 1031 exchange dollars came back, and they got to participate in the profit on the sale of that property. So all's well that ends well. Horror doesn't last forever. This is a Halloween horror story, right? So it was made to kind of scare your pants off and all that kind of stuff. But if you stick around and if you are honest with your investors, even when times are tough, and you might be facing situations where times are tough right now, if you're transparent with your investors, this too shall pass. If you're facing a horror situation, the last thing you can want to do is go hide under a rock. Be transparent with your investors. Tell them exactly what's happening. Tell them what you're doing to help them achieve a point of profit, or at least achieve some stability and that kind of thing. Honesty with investors is probably the best thing. And during that whole process, we were very honest with our investors what was going on, what we were doing, and how we were going to get them whole again. How we're going to get them profitable, as we did in this situation, which was 3x what they put in. I hope you guys enjoyed this story. If you guys enjoyed the stories I tell here on this YouTube channel, make sure you subscribe to it. Make sure you guys like this video. Leave your comment down below on what you learned. We'd love to hear from you guys on that too. And make sure you go to DeRosaGroup.com to check us out. DeRosaGroup.com, that's our website. A lot of great things to offer you guys. If you're a passive investor, there's options there, and there's lots of ways you guys can learn from us on the website too. That's what I got for you today, guys. Thanks for watching, and have a great and profitable week.